Well, let's get back to our lead story. Inflation in this country decelerated to the slowest pace in more than 3 years in the latest data, keeping our central bank on track to cut interest rates for a third straight meeting when they get back to the table next month. The Consumer Price Index rising 2.5% in July from a year ago, following a deceleration to 2.7% in the previous month's data. That's according to StatsCan numbers that were released at 8:30 this morning. And ultimately, that matched the expectations economists had, according to a Bloomberg survey. Now, when you look at where inflation seems to be cooling off, it was fairly broad-based, driven lower by travel-related prices or travel tour-related prices, passenger vehicles, electricity prices, and ultimately marked the 7th consecutive month of headline rates running within the central bank's target range. It also marks the lowest rate of annual inflation in the country since March of 2021. Where are we continuing to see lingering inflation challenges? Well, ironically, it's a byproduct of higher interest rates, things like mortgage interest costs or rents. Those are still at well elevated levels, but a lot of people are looking through that data because if interest rates come down, that story should change as well. And it looks like markets added to their dovish bets in the half hour following the release. The 2-year government bond yield started to trend lower. As we mentioned, the loonie pared back some of its gains on the day. And even the U.S. bond market was keeping tabs on this inflation story because we know they are eagerly awaiting an update from the U.S. Federal Reserve on what's going to happen with interest rates as well. For more on what to make of what's happening on the inflation fight, the Canadian economy, and for your investing perspective as well, Sadiq Adatia joining us here in studio. He's Chief Investment Officer at BMO Global Asset Management. Sadiq, good to see you.
Thanks for having me again.
You know, sometimes we come out with a Stats Canada report, and the monthly numbers can be lumpy or this or that, and the inflation story has had a pretty consistent theme, and this seems to play into it. What was your reaction? Yeah,
same as you. I think this is a consistent story in Canada on the inflation front, that we are winning the war against inflation. We're seeing a bit more broad inflation story that is decelerating and even, getting to a point where we're going to start to see year-over-year changes actually become negative on that front as well, too. Like you mentioned, I think the housing market, the mortgage market, that is still going to be the area that's still going to be a lot more stickier as renewals still continue to move forward on. But I do think you're also seeing rent starting to come down a little bit as well, or being a little bit more, less inflationary going forward. So I do think overall the story is a pretty good one. It sets up, I think, quite well for the Bank of Canada to continue on with their rate cuts.
Yeah, so we've seen a couple of rate cuts already. They're on pace to cut again in early September. I guess a lot of people were worried about whether or not other data points, we'll get some retail sales numbers later this week. The most recent jobs report, where you still have a notably elevated unemployment rate, we're starting to see a deterioration. And even if you look at the private market for jobs versus the public sector, there's arguably a much bigger erosion that we've seen there. I think a lot of people are worried about things like a recession and whether or not, an inflation story that's cooling is an encouraging one that leads us to believe there's a so-called soft landing. Where do you land on that?
Yeah, I think what we're going to see is that the numbers that we see on the surface are probably better than the underlying economy, I still think. I think there are undertones that things are a little bit weaker than what the numbers are actually showing. And that's true in Canada and also in the United States as well. I think from that perspective, I think, how the Bank of Canada started a little earlier than the Fed and jumping on rates was a smart move, knowing that they had seen an inflation story that was slowing down, an economy that was definitely weakening, a job picture that looked not as great as it was in the United States. And therefore, I think the progression that we've been seeing by the Bank of Canada is being the right one. I don't think we're going to get in a situation where we have a worrisome recession. Could we potentially dip into recession? I think that's still up in the air. It depends how consumers are going to react to the higher mortgage rates, how quickly we're going to continue to see the impact of cutting of interest rates impact consumer sentiment, and how it eventually impacts, going forward, the economy and the markets.
Let me take the complete other side and get your perspective on a narrative we've heard a little bit less around. But if interest rates keep coming down, we might see more activity in the housing market, people who are waiting to see a trend change because they'd been hearing us talk about this for months and months and months. And I think there were some who were worried that if interest rates come down too quickly, then all of a sudden there could be some inflationary effects through people jumping back into the housing market or feeling as consumers like things all of a sudden got better for them. And so they start spending again. And then once again, we're back to dealing with the inflation problems. Do you buy into that at all? How do you feel about that?
Yeah, if you may recall, about early in the year, I made that same comment that I thought that if we went too fast in the rate cuts, it would make people feel like all is fine and we can go back and spending like we are. I don't think that's what the Bank of Canada is doing. I think the 25 basis point rate cuts is the right way, slow and gradual along the way. I do think because we have the renewal still going on, even with the rate cuts, people are still going to get a little bit of a surprise when they have to renew, and that will impact their spending. So I don't think you're going to see massive inflation on that front. I don't think rents are going to soar either, from here. But I do think you might see, a pickup back in housing activity, given that people are waiting on the sidelines. But at the same time, there's a lot of people who haven't put their houses up for sale because they don't want to get another house. Even though they want to downsize, they're afraid that if they do, they're going to have to pay a higher mortgage rate on the other property. So I think what you will see is influx of homes coming into the marketplace. Yes, there'll be buyers, but I still think the price will either still head lower or at least stabilize, and we will see a massive upside in the housing prices.
And then what about, that's helpful context to see the housing market reaction in the market reaction. We've already been talking about the Canadian dollar this morning and the bond market. And there was a reaction, you could still make the argument that some of this seems to be priced into the story of Canada's economy.
Yeah, I think, Canada weakening, the rate cuts, all of that is priced in. That's why the Canadian dollar has actually held up relatively well. After having a strong, surge at the beginning of, at the end of last year and then coming off a little bit earlier this year.
Yeah.
But I think generally, when you look at the economy side of things, I think we're going to benefit a little bit out of the U.S. still being a strong economy. I think we're still going to benefit off the fact that, the global economy is still in good shape outside a few aspects of that. When it comes to our market, I think, we are a different economy that's heavily tied to our consumer, and our consumers have a lot of debt. Real
quickly, before we take a quick break and talk about some of the sectors that you're watching closely, the Canadian stock market closed at an all-time high yesterday. Can our stock market continue to climb even with this economic uncertainty?
Yeah, I do think so. I think the undertone of the economy is still weak, but I think there's things going on that can support the economy and continue to support higher markets going forward. As I mentioned, I think earnings have still been relatively okay. And I do think that we will see a continuation of the markets go higher from here, but with more volatility than what we were being accustomed to.